Good afternoon from the floor of the CME. This is Chris Robinson with your Traders Exclusive comment for the day. Well, happy Valentine's Day for Friday. Pretty good recovery action in the livestock market. I'm going to talk about that to start. After a severe sell-off, we went from 9-month highs to close to 8-month lows in a matter of a month. If you look at live cattle and feeder cattle, very, very technical corrections. After a tremendous rally between September and December, we gave back almost exactly 62%. Those 62% numbers, 50% numbers, those are like self-fulfilling prophecies. They don't always work, but when they do, they can work quite well. And by work, I mean it's the market will go there and it'll become like a line of scrimmage where the bulls and the bears decide what the next level is going to be. So long story short, we've got a good recovery started. In the past 24 hours, cattle's rallied about $4 or $5. We'll see if that extends moving forward. Fundamentally, we're looking for more exports. We'll see if we can get through the coronavirus issue. Again, underpinnings are there for a good rally. Certainly, the market had a pretty severe correction. And the whole protein complex really got quite oversold. I would watch also the lean hogs. Lean hogs haven't had quite the recovery so far that live cattle and feeder cattle have. We'll look to see if the second half of February we get that type of action. But certainly it's one of those situations where the bow and arrow, when you pull back so far, then the market will correct. If you look at the rest of the grains, we're still kind of like treading water. USDA was uneventful. We had a nice beginnings of a recovery rally for soybeans, despite the fact that South America is on schedule to have a record soybean crop as well as record corn crop. The market's kind of taken that in stride. I think the next 6 weeks, it's all going to come down to demand. If we can start to see demand pick up, everybody keeps waiting for China demand to show up, If it did, it also could set the stage for a recovery. Why? Because managed money, the big speculative funds, they're still short corn and they're still short soybeans. Not a ton, but 50 to 70,000 contracts, give or take. If we start to rally, those managed fund managers, they won't sit on a loser. They'll cover that loser. So that's the setup as we set into the second half of February. This is Chris Robinson, the Robinson Review. Look me up online. Have a great day.